Well, our next guest says his company's top-down dashboard has shifted to neutral and highlights movement in energy, metals, and tech. Here to get more in-depth on this and daily market trends is Bruce Campbell, founder and portfolio manager at StoneCastle Investment Management. Bruce, thanks as always for joining us.
Yeah, thanks for having me on.
Okay, you're in neutral right now. Where are we going if we're in neutral? What are we doing?
Yeah, I mean, when we move into neutral, what that means is that we raise up our cash positions inside of our portfolio. And how we do that is any positions that are in our portfolio that start to break down, we sell them, but we don't replace them with anything new. So that builds up our cash levels. And right now, we sit with about 20% of our portfolio in cash.
Okay, I was going to ask where you're moving at with cash. And is it really a sit and wait and see right now? Still, even we've seen some movement today. We heard that news yesterday. The market reacted, but still too volatile?
It is, yeah. I mean, we look at a couple different things. So if you just look purely at the volatility index, you see that still, is elevated above that 20 level. Anytime it's in that sort of 20 to 30 level, it becomes, very volatile up and down. And then above 30, it's almost impossible to know what the market thinks. So right now we're still above that 20 level. We'd like to see it settle down below that 20 level before we would then start to look at putting some of the cash that we have back to work into the market.
But for now, it's sit and wait. Now you're seeing weakening breadth, narrowing leadership. You're thinking those are the causes. Where does that come from?
Well, I mean, the causes really, have to do with what we've seen in the Middle East, and that's just so much uncertainty as far as what's happening economically with the price of energy, what impact that has on inflation. And, the market and investors are trying to figure out, is this going to be a shorter term event or is it going to be a longer term event? And if it is a longer term event, eventually the market itself starts to discount that. But right now, it's such a dynamic situation that it ebbs and flows, and there's news that comes out daily and even intraday that has an impact, and it just freezes investors so that either they want out or they want into the market. And we need that to kind of settle down before we would look at, investing. And so that broadening or that narrowing happens when the news changes in either fashion.
All right. Now, not surprisingly, energy is your top ranked sector right now. What's right about it and what could be wrong about it?
It's interesting that, we actually started to see energy moving up our ranks. If you remember what we do at StoneCastle, we rank about 3,800 companies in North America. And we started to see that the energy companies moving up in the ranks actually back in November. So it was even before this was an event that we started to see energy ranking better on our system. And then, of course, when you saw what's happened to the commodity prices of energy and natural gas, then it really has exploded. What can go right from here? Well, there's actually an interesting survey or a study that Sentiment Trader had done that we saw when oil moves into a backward state as it has and has had such a big spike. What happens to the oil price is really, questionable, especially when they looked out over past history. But what happens to the energy stocks is that, over a 6 and 12-month period, they actually are higher from when that event happened. So we feel that, we could continue to see stronger energy prices or energy stock prices over the kind of intermediate longer term. In the short term, that's where it really becomes, kind of anyone's guess and what happens with the geopolitical events. And yesterday was a good example. One tweet and oil was off over 10% on the day. So there's going to definitely be some volatility around news flow and what happens there.
All right. And then, of course, in the middle of this going the other way, precious metals. I think a lot of people might have thought people would be turning to it as a safe haven, but that is not the case right now.
If anything, I think it looks like what's happened is, specifically when you look at what's happened with both bonds and precious metals, is that it's been used as a source of liquidity. So people have raised cash in portfolios in places that they could. So what was most liquid? Bonds. Gold has had, such a big move, and there's a lot of people that are sitting on profits. So that was also an area, and so that's introduced a lot of volatility, certainly into the gold sector. And you've seen, this month, the gold stocks and the materials stocks on the Toronto Stock Exchange have really been hit hard.
And are we nearing the bottom for now, do you think, or is there more room?
Well, if you look at it from a sentiment standpoint, it's now starting to get to that place where sentiment starts to form that bottom, but sentiment can't be used as a timing indicator. It's just a condition. And so we could look at that and say that's one of the conditions that we see in place now, and we'll have to continue to watch and see follow through on the technicals. What we probably want to see as follow through is that, gold starts to stabilize. It had some pretty big up and down movements if you go back into February, and then into March here, it's had mostly down movements. And what we need is probably a period of stability where it doesn't do a whole lot and just starts to build that base before it, can start its move back up again.
All right, and last, tech. Remember that we were talking about tech all the time. Tech was everything, and it's disappeared kind of to a degree. Where are we sitting with that right now, do you think?
Well, the interesting thing with tech is that there's still a lot of tech companies that are doing phenomenally well, both from an operation standpoint, but also from a share price standpoint. But what we've seen is a bit of discrepancy there. So we saw, if you go back sort of 36 months to 12 months ago, the earnings acceleration was really on the large cap side. And now we've started to see that come down cap. So we've seen some of those smaller companies with the earnings acceleration that's at a faster pace. And the large cap stocks, it's not that their earnings aren't still growing, it's just that the rate of change of those earnings growth has started to slow down. And then as a result, we've seen investors start to look for other areas with faster growth. And so, if you look at the large technology stocks, as an aggregate, certainly there's always pockets that have done well, but some of them are just kind of going flat to mildly down. And you're seeing some of the small and mid cap technology stocks doing phenomenally well here.
All right, we have to wrap it up there, Bruce, but thanks very much for joining us as always.
Yeah, thanks so much.
Bruce Campbell, founder and portfolio manager at StoneCastle Investment Management.